Good morning, and welcome to the Gelman, Rosenberg, and Freedman webinar series. My name is John Pace, and I will be moderating along with presenting today's webinar. I am a partner with the firm and have been working in the outsourced accounting and finance area since 1998. This morning we will be discussing your financial reporting options and alternatives to financial statement audits. Our goal today is to help you identify and understand common areas of confusion, the differences in the types of financial statements, and best practices for being prepared. So before we get started this morning, a few housekeeping notes. We want to let you know that this webinar is being recorded and will be made available after the event. If you are experiencing any type of technical difficulties, please use the chat function that is displayed in the window on the right side of your screen. You can also call WebEx at the toll-free number shown on the screen. At the end of the presentation, there will be a 10-minute question and answer period. For anyone seeking CPE credit, please note that there will be a short survey at the end of the presentation that you will be required to fill out and submit in order to receive credit. Additionally, we will be providing 3 code words during the webinar which will be required to receive CPE credit. The survey at the end of the webinar will ask you for those words, so please make sure to take note of the code words as we are not permitted to repeat them. Please make sure you disable any pop-up blockers that you may have in use, as they may block the survey. And finally, the slide deck presentation is available for download using the link that you can see on the bottom of your screen. So presenting today's webinar with me is GRF Manager Stephen Lyons. Both Steve and I work with GRF clients in the area of outsourced accounting and with prepared, compiled, and reviewed financial statements. I've been with the firm since 2005, and Steve has been with the firm since 2007. So please feel free to contact either one of us with any questions that you may have. Okay, let's jump into the presentation this morning by taking a quick look at the agenda. So we've separated the presentation into 2 main areas, the importance of financial information, and then we're going to jump into the bulk of the presentation, which is going to be alternatives to financial statement audits and how to be ready. So jumping right in, let's first discuss the importance of financial information. So these concepts probably won't be new to most of today's participants, so we're going to briefly address the importance of good financial information. So organizations need timely and accurate financial statements to help gauge performance and help plan for the future. And so the best example of these are going to be the cases of strategic planning, budgeting, forecasting, making hiring decisions, things of that nature. Cash flow management, very critical to all businesses, but especially those businesses that are small and upcoming. Helping with tax planning. For those folks that are part of a for-profit organization, tax planning is a big issue, and having accurate financial data at the ready is critical. Optimizing your accounts receivable and accounts payable cycles. Good financial information will help you collect cash faster, help you better manage payments to vendor, and do things like take advantage of applicable discounts, for example, during your AP cycle. Having solid financial statements at the ready is an important proactive step for any organization, but especially those that may be seeking financing or that may compete for federal or state grants, contracts, etc. And we'll get into a little bit more about that with some hands-on examples as we proceed throughout the presentation. And also, we wanted to take a moment to acknowledge the importance of dashboard reporting and how extremely popular it has become over the last few years. And having good financial information allows for an easier preparation of dashboard reports, which is basically financials at a glance for busy professionals. So filled with charts and graphs and things that you can have easily at the ready for your financial needs. Great. So let's talk about why wouldn't you have an audit? In many cases, audits are not required for organizations that don't have loans or for organizations that have revenue at levels that don't require audits. Additionally, an audit is the most expensive type of financial statement service provided by CPAs, so quite often companies resist having an audit until they absolutely have to. So let's talk about some real-world scenarios that we see among our client base for reasons they may not need an audit. So let's say you're a nonprofit organization and your revenue threshold is under your state's threshold for an audit. So that's going to vary state to state, so that's something to be aware of. Let's say you're a government contractor and you have a small business administration contracts and your revenue is below the threshold that requires an audit. And in this situation, those thresholds are usually set by your NAICS code or industry code, so that's going to vary from industry to industry. And one that we see quite a lot of is that, let's say you're a privately held organization, a for-profit business, and you don't have loans or you don't have government contracts or any other type of obligations that require an audit. So a great example of this is a owner-operator business. Let's say you own an IT services company. You're not doing government contracting. Your business is done well enough that you're all self-financed. You don't need a line of credit. You don't need a loan. So really, you have no one asking you for a financial statement. So in this situation, it's all about what you need, what your organizational preferences are. Okay, so at this point in the presentation, we've come to our first polling question, which will help us get a little bit more information about you, the attendees of the webinar. So the first polling question of the day is your organization currently required to have a compilation or a review? And while we give you a few seconds to answer the poll question, we want to give you the first CPE code word of the day. So the first CPE code word is reporting. Once again, the first CPE code word is reporting. And we're going to go ahead and give the poll a couple more seconds. Okay, so the poll's ended and we're tabulating the results. Okay, it looks like, so we have kind of a mixed bag of results. It looks like about half the group has a requirement for a compilation or a review, so the rest of the folks don't have or don't know at this point. Great, so let's jump right into alternatives to financial statement audits. So we want to talk about what is better for your organization and why you need to know the differences. So before we jump in, I'd like to take a moment to discuss why we believe understanding the different financial reporting options is important. And here's a hint. It all comes down to confusion, which can lead to higher costs for your organization. So we've seen many scenarios in our practice where organizations are asked for an audit in situations where the requester doesn't necessarily mean audit. In other words, they're using the term audit generically. So we've seen this time and time again with our clients, and it generally happens when non-accountants are the requesters of financial data. This also happens, we see it also happen with a financial statement review as well. So the goal here is to understand the different options that are available to you and your organization and to avoid doing more than you're required to do unless you actually want to. So no, we do have that situation where a client may not be required to have a financial statement audit, but they just want that comfort level. So that's something that we do see. So it's all about what your organization is required to do and what you feel comfortable with. So let's go in order of complexity from left to right, and we'll start with internally generated financial statements from your accounting system. So this is going to be pretty straightforward, pretty obvious. This is your financial system, whether it's QuickBooks or whatever accounting system you're using. This is just you, your internal accountant, generating financial statements from your system. So it's as easy as that. And if you'd like to supplement that information with disclosures or notes to the financial statement, that's something that you can do. So that's obviously not going to cost you anything other than what you're already paying for internal accounting. So moving right along, we're going to talk about a financial statement preparation by your CPA. So we're going to go into greater detail on these on subsequent slides, but this is a relatively new option that's been made available, and we'll get into greater detail about that on the next slide. The third and final option, actually it's third and fourth really, are the traditional CPA financial statements known as a compilation or a review. So those are the two other options other than an audit that have been around the longest. So we're going to go into great detail on those as we find that a compilation or review is something that most of our client base is actually looking for. So before we go further, Steve is going to give us a recent example of an organization with a main operating entity and two smaller real estate holding companies, and why clarifying reporting requirements and pushing back a little bit even help the client save money.
Again, thanks, John, and good morning, everyone. As John alluded to, probably about a few months back, we had a client that their bank requested a compilation for each of their entities, and we were able to determine that their internally generated financial statements would suffice and provide the banker the information that he requested. So we met with the banker as well as the client and came together and explained how the information that was presented on his internal or accounting software financial statements would be able to suffice his banking requirements. So in that case, we was able to use the client's internal financial statements in this particular manner.
Great. Well, thanks, Steve. And for the government contractors on the webinar today, another example that we can share of why this is so important, understanding the differences, is just last week, we experienced a scenario where one of our clients acquired another small company, very small, sole proprietorship, and they were asked by the government to provide audited balance sheets for both entities for both the day before the purchase and the day after the purchase. So this is an audit that they were requested. So this client was receiving quotes in excess of $20,000 before for those audit services. And so, at that level of cost, I recommended that they definitely push back and see if there were other options that would be available to them. And initially, the government agency said no. But when they saw the level of cost that the audit was going to impose on the client, they actually ended up settling on internally prepared financial statements. So you can see that that's a pretty big swing, a cost of $20,000 or more to essentially free. So that kind of emphasizes the importance of really making sure you understand what is being asked of you, and even sometimes pushing back gently. Okay, so let's jump, other than internally prepared statements, let's jump into our first CPA prepared financial statement, and that is known as a financial statement preparation. So as I mentioned on the prior slide, this is a fairly new option that provides no verification on the underlying financial data. So this is typically used while outsourcing your accounting. So what that means is you have someone coming in, usually a CPA, outsourcing your accounting function or a portion of your accounting function for you. And so a financial statement preparation occurs when that CPA runs reports, typically from your accounting system. And so these are going to be intended primarily for internal use. There's no formal report on CPA letterhead. And that's an important distinction because many cases, we get requests from clients saying, we just need a report on your letterhead. So if that's the case, a financial statement preparation will not work for you. As we mentioned, the statements are usually generated from your software, but with a footer added that no assurance has been provided and that we have not done a compilation review or audit. So in our experience, generally, this option provides limited value and really isn't used all that much among our client base. So right about now, you might be asking yourself, well, what's the point of a financial statement preparation? So to be frank, the preparation is usually more about protecting the CPA who is providing outsourced accounting services and essentially saying, we're just running these reports for you, and these reports don't constitute anything more. However, Steve is going to give us an example of a recent client, how one of our recent clients got value from a preparation engagement for an interim period report.
Yes, so we had a long-term client that we had prepared compilations for several years, and they loved the presentation of the compilation in that format and was interested in seeing if we could have their accounting data for that interim period presented in the same format. So what we were able to do was take that information from their accounting system and essentially provide that CPA or that quality format they were looking for. And in that process, again, we removed all reports and letterheads as well as any financial statement disclosures and just presented them with a CPA package that omitted all that information. And also we provided a legend at the bottom of the report that just identified that the information had not been audited, reviewed, or compiled, and no assurance has been provided. So they took great value in having that financial statement preparation service.
Great. Great, thanks, Steve. And so really that was really all about formatting, in a situation where, they had a reporting requirement for January to June, for example. Let's say they needed to provide that to a bank or for any other interested stakeholder. So instead of just generating reports from QuickBooks, which are fine, this client really just opted for a more professional presentation. And so that's what we were able to provide for them, and that was an example of a situation that really they thought provided value. So at this point in the presentation, we're going to jump into what we think are the more popular and more prevalent financial statement audit alternatives, and we're going to start with a financial statement compilation. So a compilation is a service where a CPA provides no assurance on the accuracy of the underlying information, but we're required to read the financial statements and consider whether the statements appear appropriate. So this is an important distinction because many clients we find get a little bit confused about the different levels of what a CPA is actually doing, whether they're performing when they're performing a compilation, review, or an audit. So we're going to try to explain some of those differences, but it's important to really note that during a compilation, the CPA isn't required to verify anything. So there is a report, unlike a financial statement preparation. So there is a report in this case, and it is issued on CPA letterhead. So for those of you that are concerned about having that report on CPA letterhead with the CPA firm signature, this is the minimum report that you can do that will provide that letter. So footnote disclosures may be omitted in this case. A compilation is, unlike a review or an audit, is one of those options where you can omit the footnote disclosures. And if you're going to omit the disclosures, I should say, it's usually going to lower the cost because there's substantial work involved in putting together the footnotes and checking them over. So a compilation will often suffice for smaller organizations. Usually you can convince your bank or other interested parties that a compilation is sufficient and that you're really too small and that perhaps an audit or maybe even a review would be a financial burden for you. And so just a note about the process as well, most CPAs will usually draft the financial statements in their format based on your data, as opposed to that preparation which usually comes from your client accounting software. So let's talk about a financial statement review. So you can think of a financial statement review as one step up from a compilation and a step below a financial statement audit. So a review is considered an assurance service and offers a basic level of accuracy on the financial statement. So now notice we've entered the realm where the CPA is starting to discuss the accuracy of your financial statements, and what that means is we're going to be looking at certain areas of your financials, requesting supporting data, so on and so forth, which we're going to get to in a little bit more detail later on in the preparation. Again, there's going to be a report that's issued on the CPA's letterhead with the signature. And just like a compilation, the CPA usually drafts the financial statements in their format based on your data. In the case of a review, like we said, we're going to get more data from you, and we're usually going to start with a new client. I like to start with 3 years of financial data. So I like to get some history to help, and you're going to find out a little bit more why we ask you for that history as we go. So unlike a compilation, footnote disclosures are required for a financial statement review. And additionally, a CPA is required to understand not just your company and your organization, but we're required to understand your industry and your typical accounting practices. We're required to understand your individual organization and your typical accounting practices in order to identify areas of the financial statements where material misstatements may arise. So a good example of that is revenue recognition. Different types of organizations have different revenue streams, which are definitely going to require consideration of how you're recognizing your revenue. So that's one example. And review procedures consist mainly of inquiry and analytical procedures, which we're going to describe in more detail later, but we usually supplement those with a list of supporting schedules that we would like to see from you. Okay, at this point in the presentation, we've come to our second polling question of the day. And that polling question is, do you understand why your CPA asks you for the various items on the PBC list? So the PBC list is what we refer to the prepared by client list, or you can think of it as the document request list that your CPA provides to you at the end of the year. So take a few seconds, please, if you would, and answer the question, do you understand why your CPA asks you for the various items on the PBC list? So while you're doing that, we're going to go ahead and provide the second CPE code word of the day. And in honor of the last week of summer for most folks, the code word is school. So we're going to give you a few more minutes, a few more seconds to answer the polling questions. And then once again, that CPE code word is school. So we're going to go ahead and close the poll. Everyone's responded to the poll. And it looks like the vast majority of the folks on the call do understand why we're asking for the items on our list, so that's a good thing. I do see, you know, there are some folks that aren't really sure. They could use some more help. And so at this point, you know, I think it's good to mention that, you know, if you're not sure why we're asking for things or your CPA is asking for things, feel free to reach out and ask why you're doing this, you know, why you need this data. I think having an open dialogue with your CPA is kind of a best practice, allows them to understand more about your business and gives them the opportunity to explain to you, you know, why we're asking for certain things. And, you know, my personal belief is if you understand why we're asking for something, it just makes that communication a lot more clear, and it helps you, you know, kind of get that data that we're looking for. Okay, so at this point, we want to talk about the similarities between compilations and reviews. So both compilations and reviews have generally accepted accounting principles as the default reporting basis, just like an audit. And so the reason that we thought it was important to bring this up is because sort of what we've experienced when discussing, you know, compilations and reviews with folks out there in the real world is the attitude that potentially, because this is a compilation, that I don't need to have my records on generally accepted accounting principles, or I don't need to disclose this information because I'm not having an audit. And so really that's an improper assumption. So compilations, reviews, audits, all built on generally accepted accounting principles as the default reporting basis, so there's only one accounting standard basically for across all three platforms of financial statements. So there isn't such thing as a GAAP light, if you will, that applies to compilations and reviews. So that's important to keep in mind. And the same footnote disclosures are required for a compilation, review, or an audit. So they're exactly the same. So they're, again, you know, adding on to the first point we made on this slide, there really is not a lighter version of footnotes. If you're including footnotes, they're uniform across the financial statement platforms. So as we alluded to a little bit earlier, during a compilation, you have the option not to show footnotes, but in my opinion, this typically decreases the value of the information. You know, for most of our financial statements, the footnotes are at least as long. Actually, they're almost always longer than the financial statements themselves. And in a lot of cases, the bigger your entity is, the longer your footnote disclosures are. So there's a lot of very valuable information in those financial statement disclosures. And, you know, the financial statement disclosures are something that we work collaboratively with you on when we're developing these. And we had a recent experience where we had a nonprofit, up-and-coming nonprofit organization, and the description of their programs was so detailed that it took up about 5 pages, the first 5 pages of their financial statement disclosures. So is that required? No, that's not required. But for them and us, that was something that they got a lot of value in. They knew that there were going to be potential donors and stakeholders reading those financial statements. So they took that as their opportunity to really take a lot of time and really detail their program, what they're trying to accomplish, and how they're going to accomplish it. So that's a situation where those footnote disclosures added a tremendous amount of value to this client. So the end product, being the financial statements, looks nearly identical across the three platforms, if you will. The main difference is the accountant's report. So we've kind of mentioned this, and the report helps frame the discussion. because in a compilation, what you have is a report that is a single paragraph that essentially provides no assurance on the financial statements. It says these financial statements are the responsibility of management, and we have provided no assurance. So it's a single paragraph. So a reviewed financial statement, keeping in the theme of increasing in complexity, is a longer report. It's about 3 paragraphs. And it states that essentially, it also states that the financial statements are the responsibility of management, but that we've undertaken procedures and that no material modifications need to be made for the financial statements to be in compliance with generally accepted accounting principles. Okay, so at this point, let's talk about some differences in the compilations versus reviews. So we want to talk about this, again, to kind of reiterate that point from earlier in the presentation, that it's important to understand the difference because these terms are generally can be used interchangeably, and so you want to try to avoid using the term interchangeably. We do see the situation all the time where, you know, perhaps we're doing a compilation for a client, and the client uses the term, you know, when are you coming to audit us, you know, and so we try to correct. We want to make sure that the understanding is clear on both sides. So we try to correct that, you know, as much as we can without being too obnoxious. The main purpose of a compilation, again, so you may be wondering, if the CPA isn't providing any insurance, what's the purpose for a compilation? So the main purpose of a compilation is really to apply accounting and financial reporting expertise to assist management in the presentation of the financial statements. So kind of earlier, going right along earlier with what the example that we gave, it's really about putting the financial statements in a format that's professional looking, that puts your organization in the best foot forward presentation-wise. And again, with a compilation, we're not required to verify that underlying information, but we're going to talk a little bit about more what happens during the compilation procedure in subsequent slides. And in a hint, you know, CPAs, being CPAs and having the personalities that we do, even though we're not required to verify the underlying information, we quite often ask for supporting documentation, even if we're doing a compilation. So the main purpose of a financial statement review is to obtain limited assurance that there are no material modifications that should be made to the financial statements. So this provides greater value to the client and the end users of the financial statements because of all the procedures that we're going to tell you about, all the things that we do to help ensure that your financial statements are not materially misstated. Okay, so at this point in the process, Steve is going to take over, and we're going to start talking about how to help you through the process of compilations reviews, how to really make this process smooth and make sure you get the most value you can out of the process.
Again, thanks, John. So part of every CPA firm has their own unique process, but what's typically universal is they will all request substantial amount of supporting documentation. Also, if they're preparing a tax return, in addition to your compilation and review, additional schedules will generally be requested as well. And how this process initially begins is we will develop what's called a PBC list, which is prepared by client, and we will use this list to request supporting documentations that we may need for the compilation and review. And once we develop this list and it'll provide this list to you, we encourage you to review it, and please let us know of any questions that you may have about any of the items that are being requested. Also through the process, it's certainly important to let us know of any anticipated deadlines you need the compilation and review completed by. And actually for some best practices, I'm going to turn it back to John real quick to get some feedback on some of the best practices that he's seen.
Yes, thanks, Steve. So what we want to do is, you know, bring up some examples for you that'll help you through the process. And the last one about the deadlines helps kind of bring that into perspective. So what we like to do is communicate with our clients, and when we get the materials, we'll send them that document request list, but then we'll also reach out and talk about any deadlines. And so what we like to do is work backwards from any deadline. So if I know that you need a financial statement review and it's due by June 30th, you know, we're going to walk backwards, and we're going to figure out when we need to get all the materials from you, and we're going to consider our schedule. We're going to consider your schedule, because our goal is to meet your deadline. So we like to communication is a best practice here between your CPA. You know, so it's always better to communicate and reach out and say, here, we're getting close to being ready. You know, let's get you on the schedule, or let's talk about timelines, as opposed to just kind of reaching out and saying, here's the materials, I need this by the end of the week. So communication is really a best practice in this area.
Thanks, John. So as we continue through the process, one of the items I wanted to sort of emphasize, you know, most importantly prior through this process, is ensuring that your books are properly closed during the year prior to submitting any information to your CPA. What I've generally seen or sometimes happen is as we receive your information, there are further changes that are submitted after you've initially submitted your request, and which causes delays in the process. So it's important to make sure your accounting records are closed as best as possible. And we do know sometimes adjustments do happen, so we'll adjust as necessary. But just wanted to take a moment to certainly emphasize that. So listed below are some of the general schedules you may see that'll be on the PVC list that we've requested, various items that will be, it may differ depending on the nature of your organization, but below is a listing of those different types of schedules that you may see. So once we've, at this point, we've gotten your schedules, we've gotten all your supporting documentation, we start focusing on different areas of focus. And again, this may differ depending on the nature of your organization, your corporation, but some of the typical areas we generally focus on is revenue recognition. Generally, office lease expense is a pretty big expense, so at most time we'll be reviewing your lease agreements. Payroll expenses, they're generally also a significant expense, and we'll review your reconciliation to ensure your payroll is recorded accurately into your accounting system. We'll also review any bank reconciliations or balance sheet reconciliations and sort of agree those to your trial balance and determine if any adjustments may be needed in the event that your supporting schedules don't agree to your trial balance. And again, as well, I just want to emphasize these are just some general areas of focus. And again, if you, depending on your organization, other documents may be requested in this process as well. So with that, I'm going to turn it over for the next polling question.
Great, thanks, Steve. So we've come to our third polling question of the day, and so that question is: do you expect your CPA performing the compilation review to help you close the year? So we want to kind of get an idea from you, whether or not you expect that CPA to help you make those final closing adjustments. How do you feel that we should be a part of that closing process? And while you take some time to answer that question, we're going to give you the third code word for CPE credit of the day, and that code word is autumn. So we're going to keep the poll up for a few more minutes, a few more seconds, I should say. And again, we'll go ahead and repeat that code word. That CPE code word is autumn. Okay. Great. Okay. Well, it looks like the poll has been closed, and so there are several folks to help that do believe that do expect the CPA to help you close the year when you're going through this process. So, I think this comes back to communication, and there is, it's important to note that there really is kind of a fine line in this area. We want to be helpful to you. We want to give you good feedback during this process. But also, we have to be aware a little bit that extensive kind of write-up work, we would call it, or bookkeeping work, really is something that is outside the scope of a review or a compilation engagement. Again, it comes back to communication. So if you're having trouble with the items on the PBC list, or you don't understand, some steps that are involved in closing your year, reach out in advance. It's always better to reach out in advance, and we can communicate with you and put together a plan to help you get that year closed on a timely basis, get that done efficiently. So with that, I will turn the presentation back over to Steve.
Again, thanks, John. So the next slide, how to be ready. How to be ready with the information, and what do we do with your information during the review or compilation process? Well, we use the trial balance as the main document to draft your financial statements. As we discussed earlier, if there are any adjustments or further changes, please let us know as soon as possible so we can make any necessary corrections. We use your schedules to agree your schedules to your trial balance, so make sure all your supporting schedules do tie to your trial balance throughout the process. And as it relates to reviews, we do a little bit more, as John has mentioned, analytical procedures. And one critical analytical procedures we do is we develop expectations as a part of the review process. And the expectations can be developed in a variety of ways. One of the ways that we typically develop them is when clients provide us a budget of where they expect their actuals to be at the end of the year. So we'll use the budget to compare that budget to what the actual information is. In instances where we don't have a budget, we may also review your historical information and formulate an expectation based on what your historical information is. And what we do with these, the expectations, compare the expectation amount to actual and determine if there are any significant differences that may require us, that will require us to further follow up with your accounting staff or management, whoever's sort of running the review and compilation process, for reasons for the differences. So to better illustrate this, I'll give you an example. A long-term client, possibly we determined that revenues for the last 3 or 4 years have been, roughly $2 million, and for the year that's under review, we determined that the actual amount is, $1 million. So we have a $1 million difference between our expectation and what the actual amount was. So with that difference, we'll inquire about the reasons for it and just document why that is. And we'll sort of do this process as we go through your significant financial statement items, as you see noted below, the different accounts that may be on your financial statements, and just document any significant variances outside of the actual amounts. We'll also do other analysis, financial statement ratios as well. And again, if any adjustments are necessary due to our variances, we'll record as necessary. So to bring this home, how does a compilation and review add value to your organization? Having a CPA or accounting professional work on your financial statements adds greater value and accuracy to your financial information. Certainly adds areas of improvement through the process. Makes the tax return process a lot easier. As you know, if you're doing a tax return, they generally like to start with a set of financial statements. And then the last point gives us a better understanding of your organization. I kind of want to just add one quick note with that, is that while we come in and do the compilation review, we ultimately want to become the trusted advisors, so you're contacting us throughout the year, so we're sort of on the front end of your decision making, and hopefully the compilation and review will allow us to add that type of value.
Steve, I'd like to back up a little bit to the how to be ready slide, back up 2 slides.
Sure.
I'd like to give a little bit more information on this slide here. So we've given you some kind of top level information on the process, but let's drill down a little bit more, and we can give you some more information regarding exactly what we do. So I think this will help provide some context for not only why we ask for things, but why in some cases we do the things that we do. So what we're going to do is we're going to start with the trial balance. So we almost always start with that. So for you pure accountants on the phone, that's coming right from your accounting system. CPAs typically think, especially those in public accounting practice, we usually think from the trial balance forward. So we're going to start with that trial balance, and we're going to upload that into our system. So that's why, if you're ever wondering why we're saying, can I get that trial balance in Excel format, and why PDF is a little bit more difficult, that's why we're asking, because we take that trial balance and we upload it into our system. And kind of as I mentioned a little bit earlier, both Steve and I, when we're working on these, if you're a brand new client to us, we like to ask for several years worth of trial balances. And one reason that we do that is, to come up with a cash flow statement. Coming up with a cash flow statement, a big part of that is analyzing the changes in your balance sheet account. So if we have accounts, I should say. So if we have 2 years of trial balances, we can do the cash flow statement in our system. It streamlines the process and makes it a little bit easier for you. Another reason why we like the trial balance level and like getting 2 to 3 years worth of data, right off the beginning is because it, of course, provides a little bit of historical perspective. Again, if you're a new client to your CPA, having those prior years gives you context, gives you insight into the organization, what may have changed, what might not have changed. When we talk about the analytical procedures, when we talk about developing expectations for year-end results. So that is something that is actually required that we do. The accounting standards require that we develop an expectation. And that's important to note, that we have to spend time in that area, and that just while we will look at your current year and compare that to the prior years, and we consider a very important step in the review process and in the audit process as well, it is not in itself sufficient to satisfy the accounting standards. So they want us to look at that prior year, and then they want us to use that in conjunction with conversations with you, a budget, for example, as Steve mentioned, to help develop those expectations. So that's kind of a little bit of more insight into the actual process and what we're using. And as Steve mentioned, using that developed expectation, what we're going to do with you is use that as the basis for a conversation. So you can think about it that way. So, we're going to ask you to explain and to have a conversation about material variances between what we've come up with and documented as our expectations and what has actually occurred for the year. Now, there is a situation where, we can ask you these questions, and sometimes our expectations are they're just off, right? Because maybe we didn't know that you launched a new business line this year, for example, right? Or maybe we didn't know that you lost a major client this year. So, to kind of dovetail onto the example that Steve gave, when we're documenting our files, the type of thing we're looking for is your revenue decreased by 50%. We want to know what happened, right? So if you say to us, okay, here's what happened. We lost a major contract. We were competing for it. We were bidding and doing the best we can, but we lost it. And that happened. And we're working hard on winning another contract or whatever the case may be. That is a great explanation for why your revenue went down. And so what we're looking for is those situations. We'll take that information and we'll document that. But what we're looking for as well is those situations where perhaps you don't have an explanation. So let's just say you're reporting 50% less revenue. And we're asking you, and you don't really have an idea of what happened. So that's a bit of an extreme example, as you can imagine, but that's going to trigger something in our brains to say to you, okay, well, this is something that we need to look a little bit further at. And we need to really explore and understand, so that's going to lead to, potentially additional requests for data from you, potentially, further conversations via email, in person, or on the phone. So that's just an example of the ways, that the inquiry and analytical procedures can really be helpful to your business. And one thing to note as well is, we've mentioned throughout the presentation that a compilation, bringing it back to a compilation, is a service where there's no assurance provided. Now, that is true, but one of the things that is also true is that we're required that if we see something that looks off or looks weird or looks like a mistake, we're not allowed to actually ignore that. We have to bring that up to you. And we have to, but depending on the level of the problem that we think, the significance and potentially materiality of that problem, we are going to have to, work together with you in order to, come up with a solution. And those solutions, as Steve mentioned below, could be adjusting journal entries or some other type of, corrections. So that gives you a little bit more insight about what we're doing with the data. And, frankly, most of our clients, payroll, as Steve mentioned earlier, is by far the biggest expense. And so, just a tip for, the accountants on the webinar is, with respect to payroll, when we have issues with payroll reconciliations, and when I say issues, I mean that the accounts recorded in your financial records don't tie back to either the external IRS payroll filings, or they don't tie back to your payroll reports. One of the biggest reasons for that is recording other than salary data in those accounts. So what that means, what's a typical example for you? Let's say you have a lot of contractors, a lot of 1099 contractors. So a best practice would be for you only to record, if you have an account in your accounting system that says salary expense, that should only be for W-2 employees. If you mix 1099 contractors, if you mix benefits, if you mix anything else into that salary line, that makes it much more difficult for us to be able, and for you, to be able to reconcile payroll. So we would always recommend, since it is such a big area of emphasis, that you always segregate, payroll-related costs. So fringe benefits, 401k, all of that stuff, vendor, 1099 vendors, keep those separate from your payroll accounts. That is definitely something that will help make your life a little bit easier. So I think we can advance the slides and go to today's key takeaways, Steve.
Yep, and John, that's great insight, especially on the additional analytical procedures that can be performed if we're not satisfied with some of our explanations and the further additional requests that could be needed. So again, key takeaways from today's webinar. Recognize that the term audit is overused. Don't hesitate to ask for help. Again, feel free to contact us before, or your CPA before the review or compilation process starts, and ask for help for any questions. And then finally, make sure that your books are closed before you begin submitting information to your CPA or your CPA firm. And with that, we thank you for attending today's webinar. And any questions?
Yeah, we've come to the, thank you, Steve. We've come to the question and answer period. So the 50 minutes really flew by. So we hope we've given you some good information. And so we've gotten some questions during the presentation. So we want to go start with those questions, and we'll do this conversationally. So if everyone feel free to jump in. So one of the first questions that we got is, this person's in a state that doesn't have an audit threshold. So what do we recommend? And so we can talk about this a little bit further, but one of my first questions would be, what type of organization are you? You know, so if you're a for-profit organization, that's one thing. If you're a nonprofit organization, that's another. So why do I say that? I say that because if you're a nonprofit organization, for example, I feel that there's a greater scrutiny on your information and there's a higher expectation for a financial statement audit or a higher level of financial statements. So it could be a review or a compilation. So you know, but if you compare that to you know a for-profit business, you know you're in the business to your mission isn't to further some type of public good or some type of public charity. You're in the business, you know, to make money doing IT services, for example. So I think you have less of a public face. So what I would probably recommend is, you know, we see situations, and Steve, you can jump in as well, but I feel like when you start to pass $10 million in annual revenue, you should at least start thinking about, you know, having at a minimum probably a financial statement review and considering what your plans for the future may be for a financial statement audit. Now that is by no means an ironclad rule. We have some government contractor clients, for example, that have $30 million in revenue and do a financial statement review. So, you know, so those are some ballpark. Steve, I don't know if you have anything to add to that, but you know, just some, you know, some generalities there.
I think you hit the nail on the roof. If you're over that, so that 10 million, you know, certainly start looking for the review, and then that, you know, even possibly at that point in audit. So I think you're right on with that.
Okay, you know, and just to give you a little bit of perspective too, the Small Business Administration, and I realize this is not going to fit everyone's scenarios, but a typical example for them is going to be about obviously zero in revenue to about 2 million. Internally prepared is probably okay. From about 2 million, you know, up to like up to about 10 million. You know, you're in the review and compilation realm, and then over $10 million, you know, you're in that audit realm. And again, you know, for the SBA, that's really going to kind of depend on your industry. But that just gives you kind of a little bit of how one, you know, in this case, a government program looks at the revenue. So hopefully that answers your question there. So let's address some other questions that we've received. We have a question from someone whose bank told them last week that they need a financial statement review and they want it as soon as possible. How long does it typically take to complete the review process? So, you know, that's something that that's a situation you obviously you want to try to avoid if you can. A last minute basically request from a bank. And so, but if it does happen, we do acknowledge that it does happen from time to time. So if that does happen, what we do is, you know, reach out to your CPA and get on their calendar as soon as you possibly can. And really, it depends on the time of the year. And most CPAs, as you can imagine, are a little bit busier in that February to April time period. So, so if you can get on that calendar and there isn't a large backlog, our typical turnaround time is usually around 2 to 3 weeks. If you're existing client and we know a lot about you, and you know your organization has generally very organized and very good financial procedures, we can accelerate that timeline typically. And again, it kind of depends on the time of the year. So just something to think about there. Okay, so we have another question from a participant. What's more cost effective, having an audit every year or every 3 years? I've been told that if you don't do an audit each year, the cost increases dramatically. We are under the audit threshold. So this is a great example. That's a great question. And I have good examples for that. A church or a religious institution is a great example. Because in a lot of situations, a church isn't really required to have a 990, first of all, but also to, you know, with lacking any type of, you know, person, maybe a diocese or some other type of governing body may ask you. But in this situation, we have clients that will do a review or a compilation every year and then maybe do an audit on the 3rd year. So that's a situation that we're going through right now, where one of our clients at church is going through that situation. And to address your specific question is, does that make sense from a cost, from a cost standpoint. And the question is, it probably depends a little bit. If you're switching firms, I have my doubts as to whether that's going to save you any type of funds. I think you're going to end up paying more. If you're using the same firm, which would make sense, it is easier if you stick to the same financial statement service each year, but I do think that if you're using the same firm, an audit, toggling from an audit to review does have a marginal cost to it. So you are correct that it's not as easy to toggle back and forth. But depending on the relationship that you have with your CPA, you can probably minimize that disruption. We work very closely with our audit department. So in this case, that I'm speaking about with our church client, we did the review for 2015. We switched right over to an audit in 2016, and I'm pretty sure we're going to switch back to a review in 2015. So in that situation, we've had that client for a long time, and we understand their needs, and that's an easy transition. Okay. So we have another question from a participant. I prefer to have my reporting done on the income tax basis of accounting to match my tax return. Is that okay? So that's something that we didn't address during the presentation. We did mention that GAAP, generally accepted accounting principles, is the default presentation, but other comprehensive bases of accounting are okay as well. So the income tax basis, the cash basis, that is okay as well. And so we do have a fair number of clients that their bank, for example, is totally okay with an income tax basis financial statement. We have some clients that do cash basis financial statements as well. We're happy to do those as well, and that's something that happens quite often. But, a big drawback to cash basis financial statements, is that, of course, the data isn't smooth and normalized, and so you could have huge fluctuations depending on when you collect revenue, for example. So what that means is you have a data comparability problem. You can have a data comparability problem. So, just some things to keep in mind if you have cash basis financial statements. Okay, so we have another question. Is it appropriate to ask an accounting question outside the audit period to the CPA firm? For example, how to book an entry. Is that part of the audit consultation outside of the audit process? So that's a great question. So here's our viewpoint on that. Steve started to discuss this a little bit. We want you to talk to us during the year, and we would definitely help you. We want to hear from you. We want to know those questions. We want to help guide you through that process. So I think it's definitely appropriate for you to ask those questions. If it's something that requires, in-depth analysis and research, perhaps, or or significant work with you, that's something that would probably, constitute an additional charge. So above and beyond where we would say out of scope, of the audit process. So that's something to be aware of. But, questions that we can answer rather quickly, we're happy to do that for you. And, you're typically not going to be a charge for that. That's sort of part of developing that relationship throughout the year. So it helps us understand, you a little bit better. So we would definitely encourage that. We encourage our clients to do that. So we have about 2 minutes left. So quickly, I'll go over one more question. This person has outsourced accounting or is considering outsourced accounting, I'm not sure, and their CPA mentioned to them that they can't do a review if they do the outsourced accounting because they wouldn't be independent. So what does that mean? So, and quickly in layman's terms, that just basically means that the CPA can't really do that attest service, that review, or that audit because they're actually in there doing your day-to-day accounting work as well. So there's some assumption that CPA that's doing your outsourced accounting is really helping with those day-to-day activities, of course, helping you make management decisions, helping you run that business, providing the value in that way. So because of that, they're not really, we're not allowed, the independence rules come up, and we're not allowed to go back in and audit or review our own work. So that's a little bit about independence. And with that, we're getting close to the end of our presentation. So what we want to do is share with you the ways that you can get in touch with us. Both Steve and my contact information, phone numbers, emails are on the slide, as well as our social media presence. We'd encourage you to go to our website and check us out. And we'd like to invite you to join us again. We've done this webinar series all throughout 2017, and we have a couple more to go during the year. And this webinar is entitled Handling Functional Expenses and Developing Indirect Rates, Best Practice for Effective Nonprofit Financial Operations. So this is on September 19th, same time, 11 a.m. to 12 p.m. It's a great topic. So many of our clients in that nonprofit area, this is just such a huge area. So we really encourage you to tune in, and we look forward to hearing from you. And again, if you have any final questions, please don't hesitate to give Steve or myself a call. So thank you very much for attending today's webinar, and we look forward to speaking with you soon. Thanks.